We handle numbers like million and billion every day, but it is difficult to visualize the distance between them. In terms of time, 1,000,000 seconds ago was just about 11.5 days in the past. To reach 1 billion seconds, you have to go back 32 years. But to count back 1 trillion seconds, you would land 31,000 years ago, a point in time before the beginning of human civilization. This is the scale of the net worth attached to a single individual. At 9:30 a.m. on the Nasdaq exchange, trading began for SpaceX, and Elon Musk officially crossed the threshold to become the world's first trillionaire. This happened despite SpaceX recording a $5 billion loss the previous year, and Tesla missing its decade-old promises for fully autonomous driving. Accumulating this level of capital while running a deficit is not an accident of the free market. It is an engineered outcome, built using a specific set of mechanisms designed to manufacture wealth out of thin air. The process begins by detaching a company's price from its actual performance. Economists call this the castles in the air theory, where a stock's value is driven by psychological hype rather than quarterly profits. Investors are encouraged to look past the current balance sheet and focus on speculative futures, Mars colonies, high-speed hyperloops, and orbital data centers. This chart shows how wide that gap has become. While the market values SpaceX at $2.2 trillion, researchers at Morningstar evaluate the actual business at $780 billion. That discrepancy exists because the capital isn't following the business, it's following the person. The stock price reflects a belief in a personality rather than a functional product. Once the valuation is high enough, the next challenge is accessing that wealth without losing a third of it to the IRS. Billionaires rarely sell their shares because the moment they do, they are hit with massive capital gains taxes. Instead, they pledge those shares as collateral. Banks provide them with low-interest loans, giving them liquid cash for personal spending, while the underlying stock remains untouched. When it came time to acquire Twitter, Musk used over $60 billion in Tesla stock to secure the billions in liquid cash required for the purchase. As a result, his effective tax rate between 2014 and 2018 was just over 3%. During that same period, the average working-class American paid between 20 and 30% of their income in taxes. This allows wealth to grow in a closed loop. Because this money never enters the tax system, the responsibility for funding the public services and infrastructure that everyone uses, including these companies, shifts onto the shoulders of the average taxpayer. When the gap between the sci-fi promises and the actual revenue becomes too wide to ignore, the strategy shifts toward political defense. The goal is to alter the regulatory landscape to protect the stock. During the 2024 election, Musk contributed $90 million to Donald Trump's campaign, positioning himself as the primary financial force behind the administration. That investment yielded a rapid return. The administration introduced a new fast entry rule for the Nasdaq, allowing the SpaceX IPO to bypass months of traditional stabilization and hit the market in just 15 days. This move essentially forced the pension and retirement funds of millions of Americans into a stock that had not yet proven it could generate a stable profit. Political favors continued as the FCC granted Starlink control over more than 10,000 satellite slots, and 40 different federal investigations into Musk's business practices were dropped almost immediately. $1 trillion net worth under these conditions is no longer a sign of market competition. It is an empire that depends entirely on the favor of the government to remain solvent. This entire structure is built on a political shield. If the administration changes or the regulatory environment shifts, the inflated stock prices and the loans tied to them could collapse overnight. The weight of this hoarded wealth is even clearer when compared to global needs. The United Nations estimates that the cost to end world hunger is about $40 billion a year, a small fraction of this single net worth. Treating a rigged market like a fair game is a recipe for financial ruin. When a stock is driven by hype and political connections rather than revenue, the individual investors are often the ones left holding the bill when the crash arrives. The only investment that cannot be manipulated by a political cycle is your own capability. Markets fluctuate and administrations change, but tangible skills are the only assets that remain entirely within your control.